What's going on, guys? Nick Shaw of MFX here, and today marks the first day that I'm going to be doing the price action training program. This is going to be part one of that. So this is part one of the official MFX price action training program. Initially, I was going to make this video just a paid video strictly for clients, but I went ahead and just made it free so you guys can get that little bit of extra information you need to help you out. Now, the price action trading can help you with any trading strategy. Doesn't matter what you're looking at. Today, we're going to be taking a look at buyers and sellers. In future videos, we're going to be taking a look at the market psychology behind what creates panic, what creates people want to click buy or sell, or what creates people wanting to close an order at a loss or a profit. So today, let's take a look at buyers and sellers, okay? So I'd like to invite you to sit down and just get comfortable. Maybe get out a pen and paper if you want to jot down a few notes and just really pay attention, because the information that I'm about to tell you has been gathered over the course of almost 3 years of me being in financial markets, watching price action, watching what happens. So yeah, let's get right to it. I'm going to go to a chart here, Euro USD on the minute one. This works on all time frames, guys. So any time frame that you see price action on, that you can observe a price candle that's open and the active price, you can use this to decipher what is going on, okay? So I'm just going to take a few things that are abstract and just kind of put them all into context and sort of get you looking at what's going on in the marketplace behind the scenes, past just patterns on the chart. Patterns on the chart are useless. Strategies are useless unless they're executed under the proper market conditions, meaning you have to watch price action to see what's going on before you can use your strategy. So let's go ahead and look at Euro USD minute 5 right here. Let's look down in this area right in here, okay? This is where I'm going to be looking first. So we see price has come downwards, right? Price made it up here, started going downwards, came up here, tried to go up, and then buyers were no longer able to run the price upwards, okay? So right in here, if I draw a little trend line, we can draw a little trend line, sort of saying, hey, the market was in a trend for a minute right here, right? So here's my trend line. Price broke below that trend line, right? So buyers were going up here. You see the buyers come in hot right here with these two blue candles, spike up, and then very quickly come back down. Go up, sellers quickly jump in. Buyers try to run up again, and then sellers quickly in this red candle bring it down. Comes here to our little trend line area. Buyers come in hot really quick again, but they can't make a higher high. They can't even get past this previous high. They just test it before quickly coming back down. Buyers jump in again real quick. Market goes, cannot make a higher high. And then sellers take over, break us below this trend line, okay? So here's the thing. Whenever you're looking at a movement like this is what a lot of technical traders would consider, okay, we have a trend break. I should click sell right here as soon as it closes outside of the trend because it should go down more, right? So most people will click sell here. And in this instance, it worked out fine. So you would have sold here, your take profit would have been somewhere in here, and the market comes downward. Okay, so this was like a solid trade, and that worked out, happened to work out. But if you just take this pattern and you say, okay, I have a trend line here, and then this, and then this, and then look, my trend line's broken, I'm going to click sell. If you just take this one pattern of this candle breaking a trend line and click sell every time, you're not going to have as good of a win rate as compared to if you do this trade under the proper market conditions. Every single thing that happens in the market has history to that. It has a whole story of what's been going on. Okay, so this little movement right here, this little where price breaks through the trend line, that can be a very profitable trading strategy. Just click sell or click buy whenever it breaks a trend, right? But it has to be under the proper market conditions. Now, let's see what happens down here. The market continued downward, right? Market was going downwards. You see we had steady sellers, right? Buyers tried to pop back in right here in this blue candle. Price came down to here. The buyers quickly pushed price back up. Sellers quickly brought it back down. We go sideways right here and then down lower. And now we start making lower lows, lower lows, lower lows. Market comes up and then boom, sellers come in strong again. So the sellers are very strong now. We're clearly in a seller's market. Now what happens is price comes down to here. It makes a double bottom and starts going up. So to the technical trader who sees, oh, we're in a downwards trend. Okay, well, let me just draw a trend line to connect this. We're in a downwards trend. I'm just sort of connecting all the highs right here. It doesn't have to be perfect, but connecting it. Now, my trend line broke. Okay, cool. So my trend line broke, so I'm going to click buy right here, have a stop loss just below it, and a take profit further up here. Well, let's see what happened. The market broke up really strong, and then instantly sellers crashed price right back down. Instantly. You got up here, buyers came in really strong, and then instantly came back down, and then after that, the market collapsed even more. Okay? So let's take a look at what happens inside the mind of the technical trader that takes this trade right here, that buys it right after it breaks the trend line. Okay, they buy, they quickly get into profits, and they're like, sweet. So you know what? Instead of just having one entry, man, I'm gonna have, instead of going to Sonic tonight to eat, I'm gonna go to Pappadeaux's. I'm gonna have a nice 5-star restaurant. So I'm gonna click buy twice. I'm gonna click another buy and add another position in here. And now we can all go out to dinner tonight. I'm going to make like 200 bucks. Let's do it. 100? No, I'm going to make 200 bucks off this move. So I'm going to stack again because look how fast it's going up, right? Buyers are strong. Yeah. And so then all of a sudden price stalls out. We see sellers wicks right in here. This is like bearish wicks. And then price cracks through here. And then a big strong candle takes it all away. So the buyer who was in right here, who is now at break even again after being given a taste of some profits, 5 pips of profit if you run on this. He is now in maybe +1, maybe at 0 break even, or maybe even -1 down here if you would have clicked buy right here. So now the buyer is in drawdown. Now let's see what happens here. Price tries to go up more, and then it quickly shoots down here, and then goes up back to here to close, and then this red candle closes down here. So now the buyer is in drawdown. The buyer's in, on this time frame, let's say 5 pips of drawdown, 5 or 6 pips. So now the buyer's like, okay, well, it's okay. We're at a previous support, right? Here's my support line. So let's just throw this here in the chart real quick so you guys can see. Yeah, it's great. So it's all good. So now I can just buy again. I'm in a little bit of drawdown. It's okay. Yeah, it came back into the trend, but I'll just buy right here, or you'll wait for a confirmation. So look at this blue candle right here. So I'll click buy again. So you have buyers coming in here, buyers coming in here. Price goes down. This doesn't necessarily make them close their trades. And maybe some people close their trades when the candle come in here who had a very, very tight stop loss. And there's other traders who hold their positions, or they enter another one saying, man, I got a better entry. See, we're back at this strong support level. So what happens now? Price goes up, has a wick that goes all the way up here, but they can't get a higher high. The buyers do not win this one. The buyers try to, but they can't win. They're not strong enough. Sellers quickly sell and push their price back down. So now price comes down to here, and we're like, okay, we're back here at the previous support level, okay? So let's take a look at what's happening. Prices come from a downtrend, right? Hit here, came up, bounced, had a nice little break of the trend line attracting buyers, okay? So everyone now thinks it's a buy, right? We're looking at the big picture. Everyone's like, we were in a buy before, now we had a sell-off in a downtrend, but now we've broken our trend, so maybe it's a buy again. Maybe we can buy. So people have bought, and then let's take a look at what happens. Price runs up to right here, doesn't make a higher high, comes back down to our horizontal support area that we drew just based on these previous peaks touching, and then it breaks through that. Now let me ask you this. If you're a buyer, and you expect price to quickly just start shooting up again, and you see this, what does this do to you emotionally? You guys ever been involved in something like this? You see a support, and you're like, okay, I'm going to buy in the support. Look, it's bounced every other time. I should just buy right here, right? And so if you buy right here, where does your stop loss go? Maybe down in here, right? So if you would have bought here, you would have gotten stopped out on this. And let's just see what happened. The market comes down even more. So if you didn't get stopped out right here, you would have gotten stopped out down in here. This is like maybe a 10 pip move, which for a minute 5 chart, 10 pip stop loss is still pretty good. So even with like a big stop loss, yeah, you would have gotten stopped out of this trade. Now let's see what happens. The market starts coming back up. So now everyone who bought up here thinking it was a buy, they've been stopped out down here, right? And so now they're confused. Now they're thinking, well, it broke the support level and it came back up. So I guess it's a sell now, and we're just getting a better price to sell at because look, now we have a downtrend, okay? So let's draw in our downtrend, okay? We're going to use this we're going to use this line right here and the previous support and resistance area as an area to sell. So if you're looking at it like this, right? This is a high, this is a high. So the market comes up here and makes another high, and it also makes a high right here at this horizontal resistance now. So it's tapping that and it's tapping the trend line. This looks good. This is the perfect time to sell. We'll put a stop loss just above here because now it's broken our support and it's coming back to test it. So yeah, it should start going down, right? So sellers come in right here. They sell, right? If you were a buyer, you would have got stopped out unless you're like holding huge drawdown. And then you would sell right here with the stop loss just above here and you take profit somewhere further down there. Let's see what happened. Price ran up. It would have stopped you out if you were a seller. And then it even wicks out to take out this high right here. So everyone who's a seller sees that. They quickly get drawdown. If you would have sold here at the 2.6 area, you would have been out at 3.8. That's guys, that's 12 pips on the minute 5. So even if you had like a very wide stop, you would have probably still gotten stopped out. Or if you would have stayed in the trade, you would have been nervous because now at one point, this was a big blue candle that went all the way up there and it's broken above this one. Okay. So you see that. Now let's watch what happens. The market comes back down. Sellers come in very strong, but as soon as they get to this level before, they say, okay, price starts going up again. Okay, well, I guess it's a buy. I don't know. I mean, I thought it was a buy back here, but I got stopped out, so it can't be a buy. But then I thought it was a sell right here, but I got stopped out there, so I guess it's not a sell. So price comes back, and now it's bouncing. Oh, okay, well, I guess I'll buy right here. So people buy, and the market comes back around and plays with them right here, makes a lower high, and then as price goes on, price wicks all the way up here. So if you were a buyer and you had maybe like a, what's that, like a 25 pip take profit or something like that, you would have quickly got your take profit hit and you would have won that trade, okay? Now, this is the trade you would have won, but if you would have taken all the other trades back here based on technicals, based on just looking at, hey, price broke a trend line or broke a support and resistance, you would have lost money here, you would have lost money here, and you also would have lost money whenever you sold right here. So for all of these pips you would have lost, you would have made it all back and broke even on this one trade. And now you're at the mercy of the market makers again, getting manipulated. Has this ever happened to you guys? Am I crazy? This used to happen to me all the time when I would trade. And you have to look at it in reference to what the market makers are doing. You have to look at everywhere else where everyone else is selling and everyone else is buying to understand the psychology behind why do the market makers run price here? They know if they can make other people lose money, they can make money. Whenever your goal as a big banking institution, big financial institution is to take money from other people, what better way to do it than to play on their emotions? Have you guys ever been to like like a store where they're trying to sell you something? I mean, obviously, right? They're trying to sell you something to get the commission, like a t-shirt or a pair of shoes. What do people try to do whenever they try to sell you on something? They try to appeal to your emotions, right? Because we buy more based on emotions than we do logic. And so if you can create emotions in someone that you want them to buy something or you want them to do something, you want to convince them to do something, it works the same exact way in financial markets. These people, these market makers who take your money, they have to convince you to click buy or sell in the hope that maybe you'll make a little bit of money off of a trade. And they convince you to lock your money into the market and they quickly spike it. They'll take it away from you. They'll confuse you. They'll think, oh, well, it broke trend right here. Why did it come back in and then go even lower? I thought this was a buy. I was either in huge drawdown and just closed at break even or up here, or it got stopped out and then thought it was a sell. But then it went up here and stopped me out and started coming back before going up. So all the buyers who got it right here got played with because the market faked them out and then came up. Okay, so let's look at another example of price action. You can find this all over the charts. This is actually a trade I took today, Euro USD minute 5. This was actually on the minute 15. So let's look at this. So right here, I'm going to look at this channel here. We see that price is in a channel, right? So price has been in a channel. Then we had a fake out and the market quickly came back into this area and started going up, came back, but was getting rejected right here at this 1.2326 area. So then price ran up here really, really fast. And that's what I wait for before when I'm looking at a setup. I wait for price to make a quick run up on the chart, okay? And now if we're looking at this as part of the Mission FX trading rules, I'll tell you what, I'll throw you a bone. I'll give you rule number 1. RSI has to make an initial peak near the 75. Whenever you're looking at a divergence, wait first for the first peak of the divergence to go to at least 75 or past it. That's what happened here, okay? Now, the market came down a bit, came down far, far back here. And then people are like, okay, look, it's an uptrend. It's clearly a buy. I want to get a discount. So people bought right here. So this trade worked out if you're a technical trader buying along this trend line. Then the market goes up and makes a higher high at this level right here. So people know that round numbers are typically where price, let's say they price reverses at these like round numbers. So 1.2400, 1.23500. Some people call them psychological levels. You can call them whatever you want. I call them like round numbers. So these round numbers that are very, very clear, there are a lot of areas where the market makers, hedge funds take their profits. So whenever price gets to one of these levels, a lot of people will sell. So if you sold right here, let's go to a smaller time frame. If you sold right here, you see price kind of stuttering to get past it, right? Price is like going sideways for a bit. It's having trouble getting past it. So if you sell here, typically your stop loss is going to go just above the high, right? Because, you know, okay, if it gets above this resistance area, then I'm going to just scratch the trade because the trade's no longer good. It shouldn't go above that area. It should go straight down into my 50 pip take profit or even like a 25 pip take profit here to these previous highs, you know, so it could come down there and then maybe bounce. You could take your profit in there. Let's see what happens. The market starts going down right here whenever it breaks this previous low. Let's zoom in even further to get the whole story. Now, the market was running up, right? So this right here is like our little support area. The market went up, and then it rejected right here at 2.4. So that's good. That's a good, like, you know, resistance level. Market comes here, goes up, quickly goes back down. So now you're thinking, oh, sellers are strong. Okay. So then the market goes up, can't get to this level, then starts going down and breaks these previous lows. That's when most people see, oh, look, it broke the support. It's also rejecting a resistance. Perfect. I didn't enter up here because I wanted to make sure I got a confirmation. This is my confirmation. Look what happened the second people hit sell. The second you hit sell, if you were to trade this, based on the market's been bullish for a while, the uptrend is over. Now we're at a psychological level, a round number, we're at a resistance. I'm going to hit sell right here. The market instantly shoots up, goes to this level, but then starts to go down again, okay? If you're right here, you know, 10 pips of profit, looking at a minute 5, 15 chart, that's not, 10 pips of drawdown, that's not that big of a deal. So you're not going to be too worried just by seeing this movement, especially if you're looking at it from a minute 5 chart. So then it goes here, then it starts going down. Okay, then you're like, okay, you can take a sigh of relief and then maybe even stack an extra order. So now instead of Papados, now we're going to go to Del Frisco's. Del Frisco's is like a super high-end restaurant here in Fort Worth, Texas. And so after that, the market starts going down again. Let's see what happens. Then it starts going down even more. So now you're like super happy. Now you're like, you know what? I'm going to stack on a third entry. Look, it's not getting past this area. I'm going to stack on a third entry. Move my stop right over here, just right past these highs because it's not breaking them. And I know if it breaks them, it'll probably continue up. So everyone's selling, right? We're all sellers now. We were in an uptrend, but we broke that trend and now we're about to head down, right? So let's see what happens. The market starts rallying up and then all of a sudden it breaks this resistance area. So let's look back again and let's think what the psychology was, right? You had buyers, a little bit of sell-off right here, then buyers. Oh, look, it broke this previous peak, strong buyers. Everybody's buying. But then the market starts to go sideways. Then it goes up here and gets rejected. Then it goes up here, gets rejected again and again and again. If you're a buyer and you see this, you see the market going sideways, right? If you think the market is about to turn around, do you want to be in a buy? What do you want to do? You want to close your position, right? You no longer want to be in that trade if you're a buyer. So now instead of a buyer, you close your order and you convert that buy to a sell and you become a seller. That doesn't necessarily mean you click sell and enter a sell position here, but that just means you close your order anticipating, hey, I've had a good run, you know, My buy was good. And then now I think it's going to drop and turn into a sell. So I think I should just get out. So you close your position there. Then what happens is the market goes and it cracks that resistance area. So it cracks all these highs, goes up. So a lot of the people who were sellers, right, who sold right in here, who sold in here, or who sold right at the little resistance area, the 1.240 level, the price is all going up, and then now everyone's worried, especially the ones who got down here. Because if you got down in here, you're now in almost what's that, like 20 pips of drawdown? That 20 pips is kind of substantial drawdown. 20 pips is typically my stop loss. And so if you would have sold right here when everyone else did, the market makers are like, great, everybody's selling. They can sell to me and I'll buy a lot. And I'll buy a lot and I'll run the price all the way up here until I feel is fair and everyone else has gotten stopped out. And then after I've gotten everyone stopped out and confused everyone and convinced the buyers to hop back on board, everybody's clicking buy when it goes back up here because they're like, look, it's going to continue the uptrend. It broke the highs. They're like, cool. They're all clicking buy. I can click the sell. And whenever they click that sell, they sell off right in here. The buyers try to come back in, getting the good entry, right? They can't make a higher high. Market starts coming down, breaks below this little 240 level, goes up, can't make a higher high. So now we're in a downtrend. And then the market does this right here on this big red candle. Trading a trend line like this after you have the backstory is so much more profitable and makes so much more sense if you have the big picture of what's been going on before. You have to know what other people are doing whenever they're seeing these patterns, who's in the trade, who's in drawdown right now, what are buyers and sellers thinking and feeling most importantly. Okay, so now would be a good area after you've determined, okay, the market's gone up. Now it should have tapped here and continued up to make a higher high if it was going to go up, but it didn't. Buyers couldn't win. They come down, they keep getting pushed down over and over and over. And then what happens? The market starts to turn over. Okay, market comes down all the way to here. It would have hit your take profit if you would have, been a seller and set your take profit right here. But if you would have gotten scared or confused or not known what to take a position just because a support or resistance area got broken, you're not going to make money because you don't know what other people are thinking. Okay, so the market came down here, and then what are we at? We're up here right now by 2393. We're about 2 hours into Asian session. So that's what happened earlier today. Now let me show you guys the trade I took. It was actually this trade right here and this trade up here. And I'm going to show you what time frame I was looking at. So here's what I see. I see the market breaking out of a range really quickly, coming back down, tapping this little psychological level, which is like a support resistance area. So it tapped it, a bunch of buy orders got filled, a strong wick upwards, and then two strong blue candles upwards, then a strong blue bullish candle upwards, and it got to this area. So guys, you already know the pattern that I love, the pattern called divergence. Now, I used to always get screwed on divergence. I used to hate divergence, man. I used to just trade support and resistance, but the divergence pattern I've created has very, very specific rules. And if these rules are not honored, I don't take the trade. I just don't. So the market came up here, came down, shot up really, really quickly. That's the big deal right here. It shot up very quickly to this level. I sold right here, had a 10 pip take profit. That profit got filled, and the market quickly shot up again, and I sold again because if you look on our RSI, here's our initial high, which is this right here. Here's our second high, and our second high up here went higher. See, so first peak, second peak, these are going up. Here's our first peak, here's our second peak. These peaks are going down. So this was another divergence as well. So I sold that while everyone else was buying, thinking it had broke the level, it's going to go up. Everyone else was buying that who's a technical trader because look, it broke the support resistance area. Even if you're being conservative and saying, I'm going to just buy whenever it gets back here and retest this area. Look what you're thinking. The market goes up, you're like, okay, well, it's a buy now, but I'm going to get a discount. So I'm going to buy if it comes back and retaps this support resistance area. It goes back, taps it, shoots up on this blue candle. That convinces buyers, oh, look, you're good to buy. Look, it's getting rejected. Here's a strong candle up that's sort of broken this little downtrend. So this blue candle goes up, everyone else clicks the buy, instantly taken from them. And then dips below, and then starts going lower and lower and lower. So you can be a part of that if you want, or you can follow the simple pattern that is divergence and understand the price action behind why the divergence pattern works. The divergence pattern works because while everyone else is getting stopped out, you can identify and understand what's happening because you see the fast move that breaks the high after a long sustained trend. Okay, we're going to go over one more example. Let me find, I'm just going to go to any pair right now. Let's go to GJ. I like GJ. Let's find a divergence pattern today that happened and take a look at what's going on. I'm just going to find a good one for you guys. I want it to be very clear so that you guys can understand. This one's kind of small, but I like it. This is a pretty good one. So the market's going up and up and up and up and up, right? Then it comes down. Then we have strong buyers going up. Then we have buyers go up even more. And then the market comes down right here and quickly spikes up to this support resistance area. I sell as soon as the divergence happens, okay? So here's our first peak, right? This is our first one. Market comes down a little bit, then spikes up and taps that area again. So right here, we can see these peaks are going downward, these are going upward, and it's at a psychological level. So since it tapped it, I would have sold it right there, but the key is it has to be on a fast candle. It has to be on the fast candle that breaks the previous high that creates confusion. A good example of this would be this right here. You don't have to trade it at psychological levels, but you can trade it like this. Check it out. Market's going up and up and up and up and up, right? We make a high right here, which is this. Then the market comes down, goes and cracks that high, cracks right above it. And so everyone's thinking, okay, we're in an uptrend, right? The buyers are so strong they can't even come back to the trend line. Everyone's just buying up, and now we broke this high. I'm good to stay in the trade. Or if you're not in yet, you can say, okay, we broke this high again, so maybe I should buy. Maybe I should click the buy. Up here, you see the market, these peaks are going upwards, these peaks are going downwards, which indicates, hey, my trend is losing steam. There's not enough strength, or there's not as much strength that there was before because we had a divergence. These two peaks right here, look at this right here. This is divergent as well. What happened right after it went divergent? The market pulled back for a little bit. You see that? Same thing right here, divergence, very, very strongly on our RSI. The market goes up, they try to make a higher high, but they can't. The buyers fail to make a higher high right here, quickly get pushed down, come back down a little bit more. The buyers try to come in again, but quickly get sucked up by the sellers. This is the area where your buyer gives up. And look what happens after the buyer gives up. After the buyer, the big boy buyer, is no longer in the market, price starts to turn over. Now you can enter right here on a sell, or you can enter right at the tip of the divergence, because if you do that, you get little to no drawdown almost every single time. And the drawdown you do get, you can stack until it goes roughly on the minute one, maybe 15, 20 pips. It depends on the currency pair. GJ moves very fast. Sometimes 10, 15 pips can be smothering a trade, so you want to go for 20. And it'll take you roughly two to three trades to make that back. But that's how it goes with scalping. But if you have a high win rate, then you can very predictably make these little small moves of the market, only focus on those, and come out on top week to week. Okay, so let's look at this again real quick. Market's been going up for a while, comes right here. Buyers, right? They run the price up to here. Sellers quickly come in. Now the buyers like, perfect, I got a discount. Boom, this blue candle right here is our big market makers jumping in. Sell off, more run up, buyers coming in strong, breaking the high, but then boom, the sellers quickly take it away. The buyers come back in, try to make this higher high, but they can barely crack it. It's like right at that level, and quickly get sold off. So now the buyer's a little bit worried because he's like, oh, dang, I couldn't make a higher high. That's not good. Well, let's see what happens. I'm going to get a better price and try to run the price up. So now the market comes over right here, breaks our little trend line that we're going upwards if we draw a trend line right there. So it breaks that. Now the buyer is a little bit more nervous, the big hedge fund buyer. So right here, the buyers and sellers fight for a second. The buyer tries to run the price up again right here. And then sellers quickly take it away. And then they crack below this area. And this area right here is where the big buyer says, screw this, I'm out, I'm done. There's no way I'm staying in this trade. So the buyer, our big, huge bank, gives up right here, a big buyer. Right in here, and then price starts dropping, and then price just starts dropping and turning over for a while. It also, after it broke this uptrend right here, look, it broke another trend right here. That's really, if anyone else was in, that's when they say screw it. That's why you see price quickly just start to turn over after that. And it goes down for quite a long time. So if you just take a support and resistance line break without understanding the backstory, you're not always going to win those trades. But if you trade technicals or you trade divergence and you understand what's happening, you understand that while other people are getting stopped out on moves like this, you're making money. You understand that it's all price action and it's all the market makers manipulating price. Okay, and that's good. It's good for the people who know how it works, but it's bad for the people who don't. So that being said, guys, what I want you guys to do is I want you to focus on reading price action as a story as opposed to just candles in the chart. I want you guys to look at price and think of it this way. As you see price going up, you see, okay, we just broke out of a range and our buyers are strong, but now we're having some pullback right here. But now look, our buyer comes in strong again, but he can't make a higher high. He doesn't make a higher high, roughly the same level before the sell-off starts. Now we don't go as low, then we go high up here, but we can't really make a higher high. This is barely like 1 pip. So the market, they still failed to really make a higher high right here. Then the market dips right in here, attracting a bunch of sellers who are like, look, this area is getting rejected. As soon as a bunch of people click sell, market makers aren't going to make it that easy for them. Market makers are going to run price up here, and then they're going to bring the price down here before cracking this level, scaring everyone who sold right here and scaring all the sellers who sold up here with their stop losses just above. So the market runs up there, hits all the stops of the people who sold. And then now the market may pull back or do whatever it wants, but right in here where everyone else is losing money, understand that you need to read price action as buyers and sellers, market manipulation. Who's jumping in, like right in here? Everyone's selling right here. Who are they selling to? They're selling to the people who want to buy, like the big market makers, the big boys, big players in this market. So yeah, that's what I want you guys to do. So I know this video was kind of sort of long. I know it may be a little bit confusing, but I want you guys to really take a look at price action this week. Watch this video a couple times, come back to it later, take a few notes, watch portions of it. And the best thing you can do right now after this video is over, jump on the charts, open up any chart, any time frame, and look at the candlesticks as price data of psychology. Look at it as people's emotions. What are people thinking if they bought at a certain area or if they sold at a certain area? How are they feeling if they're in the trade and they're getting stopped out or they're down like 10, 20, 30 pips? Those are the questions you need to ask yourself. And if you apply this knowledge to any trading strategy, you'll see, okay, this is a better market condition for my strategy as opposed to maybe this market condition right here where the market's ranging. Some strategies work better in an uptrend or a downtrend than they do in a flat market just going sideways. Some strategies work better on days where the market is very volatile, spiking upwards and downwards. And some strategies work a lot better when there's just kind of like a steady price action upwards or downwards and just a bunch of retail traders jumping in without that much manipulation. So understand your market conditions and understand buyers and sellers. I hope this video is able to help you guys out a little bit. I will see you guys in the next videos later this week. I'm super happy to be creating this price action course for you guys, and you guys enjoy the rest of your week. Happy trading. This was Nick Sean of Mission FX. Bye.